Já, komið þið sæl og blessuð. Ég vildi byrja á að þakka Friðriki til að bjóða mér hér í dag og líka þakka Björgvini fyrir kynninguna. En ég skal halda áfram á ensku. I'm not going to break your ears. Today, I'll be speaking to you about digital banking trends. So my background, I've been in banking for over 20 years. I was 20 years at HSBC and worked in 7 different countries. And of course, most recently at the board at Landsbanken. Today, I want to talk about 3 topics relating to the digitization of banking. First is trends in the industry, digital strategy considerations for financial institutions, and the potential impact on valuation. I think this is specifically relevant here in Iceland, where the banks are looking to go public in the very near future. And to start off, I actually thought this was a really good definition about digital strategy. It's the process of identifying, articulating, and executing on digital opportunities that will increase your organization's competitive advantage. So there are many stakeholders, of course, influencing digital strategy. And at the forefront, of course, is the customers and their changing demands from what they're requiring from their service providers. Now, having been in banking for so long, there's a lot of pressure from regulators. There's a lot of regulatory change as well that's required to be implemented. But myself coming in here today, so I'm taking a perspective more on the shareholder and the investor basis and their views of it. I mean, having worked when I was at HSBC, I worked for 3 years in investor relations, managing the program globally during the crises, from the time we were highlighting the subprime issues in the summer of 2016 up until during the financial crises, and then the mega rights issue of $17 billion in early 2009. So I had a lot of interaction in the market, both with the equity analysts and, of course, the investors. On the other side, of course, having worked at Landsbanken, and again representing the shareholder, but I had the opportunity to chair what they call the Framtíðarnefnd, the Strategic Development Committee, and thinking about really what is the future impact for the bank. So that's the angle I'll be looking at it for this presentation. So first off, I'll take a look at the overall trends in the industry. So business models are being completely redefined, right? They're going digital. I'm sure most of you remember, of course, Skivan, right? It was one of the best stores, I thought, in Kringlan. Very busy. This picture was taken not too long ago. I don't know if you know where it is today. I Googled it. It's on heimkaup.is. I mean, of course, this whole world has been changed by the likes of Spotify, Amazon, Netflix, right? They've changed the model. And for financial services, in my view, it's no longer about bricks and mortar. And this one is at heart, right? This is the unbundling of a bank. And universal banks such as HSBC are having their services cherry-picked by niche providers. So for me, it's like, oh, it's kind of a strike in the heart, because having worked for them for 20 years, and even with Jason here in Monzo Bank, a good friend of mine, he's actually supporting the company in their financial PR. And we had a Skype the other day, and he was showing me on Skype, Danielle, look at Monzo, it's fantastic, And he does bank with HSBC, he's banked with HSBC all of his adult life, has his deposit there in terms of his salary, but downloads everything on the card. He sees everything at a glance, he knows exactly what's being paid, right? So every day-to-day transaction now is done via Monzo Bank and not HSBC. HSBC just keeps the current account and gets that deposit in. So they've lost completely the transactional side. So again, Now that's a really big change for the bank. The regulatory environment also is having a huge impact on banks and their competitiveness. Friðrik went over quite in detail about PSD2 and the changes there, but it's an absolute game changer. Banks have to provide account access to third parties through open APIs, and of course this is with customer permission. But this is taking down the walls. I mean, the banks have been so protected, and it's been such high barriers to entry. And this is absolutely a game changer when it'll be coming into effect. I mean, this year in Europe and of course next year here. Then there's the EU GDPR, the new General Data Protection Regulations. And for me, this really challenges the principles of big data. Right? Everybody talks about big data, how are we going to get more information out of it? Companies, under this new regulation, will have to actually consider data minimization policies because of the responsibility that comes with withholding personal data, and therefore to minimize their risks. And also, under this regulation, they will have to give back data to the individuals in a digital format. And this is not just the banks. This is across the industry. This is all companies that hold personal data in Europe will have to give it back in digital format. And that will then transform into the personal data economy because you as an individual will have so many more slices of information, and that becomes very valuable to any types of providers who want to provide you service, and there's a value in that. But you're holding the information as individual. You no longer have these big honeypots. So is there a competitive advantage really for the banks to be holding this data and compared to what is out there? And then, of course, there's the Competition Authority in the United Kingdom. They're very much focused on this open banking. In their view, customers are paying way too much in terms of overdraft fees, in terms of what's out there, and actually the services aren't tailored specifically to their needs. They want to make it much more accessible for the smaller players to be coming in. They are requiring that the banks in the UK digitize their services and provide transparency in terms of the pricing around it. So you're having all these comparison websites that are popping up to say, okay, download my data, tell me exactly how much am I paying there, what's being offered on the other side, and by the way, I can switch, right? So this regulation, this is really big, this is a game changer within the industry. But it comes down to your clients, right? And we have these millennials. And of course, I've been reading about Chris Skinner. He's got a really good book on digital banking, and he talks about the digital alien versus the digital native. And I'm definitely digital alien. I think I got my first computer. I must have been 13 or 14 years old at the time. I'm not too bad at tech, at the computers, but looking at the kids today, right? They have been raised on iPhones, on their Androids. They love instant gratification. They love gamification, right? They have all these games, they want their rewards, and the services are absolutely tailored to their needs. That's what they're looking for, right? So they'll be the ones who actually are going to drive demand for digital going forward and how business will be shaped. And I think it'll have a really big influence over the next 3 to 5 years, as they really come in, quite strongly into the workforce, both on the personal banking side, but also in the corporate world. And I just want to ask a question here to everyone. Can you tell me if your banker has ever called you? Hands up people who've had their banker call them. Right? It's not too many. And this is the point. This is where how traditional relationship management is conducted. You have this 80-20 rule. Right? We focus on 20% of the clients who bring in 80% of the profitability. It is an expensive proposition. At HSBC, of course, you had the private banking clients, and you have a really good relationship model there. Then they had premiers, so between $300,000 up to $1 million in liquidity. And then after that, then you split it up in your ABCD clients, which is also well known here, and then how do you service them? I think last year, Landsbanken has a really good initiative, this 360-degree review, where there's a one-on-one meeting with clients. So in 2016, over 8,000 meetings had been conducted with 8,000 individuals, which is fairly good. So you think about a 30-branch network. That's quite good. But you compare it to the overall customer base, which is 120,000. So if you're going to get through all of your customers, you're going to get 10 years to get through all of them. If you want to reduce that amount of time, you'd have to actually blow up the number of relationship managers that you have. So that's I'd say, the traditional relationship management, this 80-20 rule. And then you come to the life cycle of a customer, and this is a life cycle, general life cycle for a personal customer, but you can also map this out for an SME up to a corporate. What is it actually their needs? And it's a very reactive relationship. Customers will go to the branch, or customers will call up the bank when they need something. It's not a vice versa, and yet everybody goes through the same thing, right? Because everybody goes to Mentascoli here, right? You graduate from Mentascoli, you're going to go on your trip abroad with your friends, and you get a credit card. And then you're going to open, and you've had your current account because you've had it since birth, and of course you have all the money you get from Fedmingen, right, over the time. But we know what the life steps are for our customers. And yet we still have this very reactive relationship. And for me, it's no longer about this reactive. It's about becoming proactive and having an online engagement that you can completely reverse these figures. And not only catch 80%, you can get 100% of your clients every day of the week. Right? So it's thinking about, okay, how are we going to change this relationship management model? So the key question is, with these trends and regulatory changes, how should the bank reposition itself for the future? And this is where we get into digital strategy, not digitization, right? And let's be honest here, and as Jason was saying earlier, today is not about digital strategy, it's about IT, upplysning teknik. It's about our IT strategies and what we're doing in the companies. And it first came out to actually automate processes, to get cost savings there. Then, of course, there's further cost savings moving into customer service. So you had the first ATMs that came out, and that was revolutionary. But everything, again, phone banking, internet banking is very much on a transaction basis. And it's to help to reduce costs. And over time, of course, banks have collected an amazing number of core systems, hundreds of core systems. And the challenge for them, of course, is to consolidate and upgrade these systems so that you can simplify it. But this is a bit like a comparison with the Tube in London, right? The Tube was built in the 1800s and the 1900s. But today's requirements, you need air conditioning, you need wheelchair access, you need lifts, people want Wi-Fi, but you're having actually to use the same old infrastructure. And even Green Park Tube Station in London, they installed a lift, it cost £50 million, and it took 2 years to do it. And so this is a huge challenge within the banks, and there's a lot of energy and focus that's taken into that on the IT side. So the question is, everything we've been doing up until today on IT is about operational effectiveness. But operational effectiveness is not strategy, right? The operational effectiveness, it's more your data defense. How you're reducing your expenses, look at the regulatory requirements, prevent cyber attacks, look at your internal control framework, et cetera, et cetera. Moving into the digital strategy, actually coming up with new products and services that you're differentiating yourself from the competition. So if we look at digital strategy, of course, IT has been at the core of it, right? But very much inward-focused, looking at, what are the different projects that need to be done. You get a list, and it's typical, but both, abroad, having worked at HSBC and here, you have the priorities. Okay, now commercial banking needs that, or risk management needs this, or we've got to launch something for the website. And having those priorities come in and saying, oh, well, what is it we're going to do? And ultimately, the IT department is choosing that. And it's much more focused on actually the processes rather than engaging the users. Then you have business strategy, but it'll be very siloed again, right? Looking, okay, what is it the risk department needs? What does accounting need? Okay, we'd like to have a better CRM system in corporate banking or in personal banking. So what are the needs to actually run the business? Oh, now we have the new IFRS 9 that we need to implement, right? So you're looking very much on a siloed way. And then there's, of course, the online strategy. And seeing, okay, what is it that we want to do with clients? And then again, that's been quite separate. I've seen it, for example, in HSBC, the website department was actually totally separate from the IT department because it didn't really talk, because again, they don't look at the users. But again, quite isolated. So what digital strategy does, it brings it to have this one holistic approach to think, okay, what is it that we're going to be driving for the business? And working together, with these three key different areas. Then we take, the considerations, and this is, coming in at the executive and the board level. How are you going to drive this digital strategy going forward? Obviously, you've got a plan, but how are you going to do it? And at HSBC, they always had this split in terms of budget for change the bank versus run the bank. And I would say around 30% of the budget was used on the Change the Bank. This is what we published. I did a major event in 2008. And now this year, it's interesting to see the 2016 annual report from HSBC. So you've got, of course, the group chairman's statement and the CEO statement. So the group chairman's statement, the key headline in the big bold was, the group has improved its productivity, embraced technological change, and continues to reinforce its standards of business conduct. So technological change is at the top. It's amazing to see. I mean, I'd never seen that, especially the time I was there. And then if you look at the CEO statement, half of the CEO statement is actually talking about a business for the future and their investments into a digital transformation. They're spending $2.1 billion for that. But also when I worked at HSBC, it was always very proud to say in the IT department, we have more developers than Microsoft. And this is where, you know, for the development, so if you're thinking, okay, what type of budgets do I need to be able to drive it forward? But for the development, is this something I'm going to do in-house? And HSBC, I'd say, is pretty much in-house, right? But it's a mammoth of a group. They say that they're actually working with external partners and with some blockchain and with some fintech, but I cannot believe that it's having that huge an impact within the group, the way I know it. On the other hand, so when we're in smaller companies and more manageable, as here in Iceland with the banks, do we consider actually, do we want to do this in-house? Because the in-house actually, it takes a lot of time with all these core banking systems that we have. Is that something that's giving us competitive advantage? So do we need to have it internally, or is this something that we could have externally? And then the same thing on development on the top line side for the revenues, to be able to make yourself different. Is this something that you want to keep in-house? Or is this something in terms of getting the agility and getting things going and working with external providers? And I think that's another key decision that needs to be made within the companies. And what can be some unique selling propositions? And of course, I could have talked about Monzo, but Jason was here today. So I'll talk about these four, which I find interesting. The first one is Metro Bank. And it's not a pure online. This Metro Bank was actually the first bank in the UK that got a banking license to open in the high street, and it's in 150 years. So really high barriers to entry. But they wanted to open the bank in the high street to be able to attract, you know, new accounts and to get to deposits. Because for them, their strategy is we'll have maximum 80% loan to deposit ratio. It's sticky business, you pay less for deposits. And also people are less finicky, such as the wholesale markets, as we saw here during the crises, where, you know, liquidity completely dried up. So they're very strict policy on that, but they're doing it by opening the branches on the high street. And they're also, the other pain point that they've looked at, of course, is current account opening process. It takes forever. Their current account opening process, and of course compliant with anti-money laundering, is 15 minutes. And you get a debit card. And you walk out of the branch, and you've got it, right? They're also open 7 days a week, like retail. And of course, they have all the online proposition. The other thing that they did is they've completely outsourced everything IT-wise to Tenemos. They do not have any IT within the bank. And then the way that they measure their staff, the bonuses are fully related to customer satisfaction. Not cross-selling, not the number of revenues. The only KPI is customer satisfaction. So it's a very different and unique model, and there is the customer satisfaction surveys in the UK for Metro Bank at the top. Another group I think is very interesting is Vitality Group. It's a life insurance company. It's an insurance company in the UK. And if you go, and their objective is to have healthy clients. And if you go on their website today, you can actually see they're promoting for you to get an Apple phone or an Apple Watch, right? And if you join their program, and of course you have to link up your data to them, but the more you exercise, the less you pay for the phone. And actually, if you get to a certain point, you don't pay at all for the phone. And then they have all this gamification. The more steps you do in a week, you could get movie tickets, you can get some new sneakers, perhaps a gym membership. It's really neat. On the other hand, what's happening? So you've got customers that are satisfied. This is engagement. This is different. I'm getting healthier. I get actually rewarded for it. But the company itself now, Vitality, has real-time data on the customer's health. You know, life insurance companies basically usually sign up, you open your account, you fill in a form, and that's the data that they have for I don't know how many years. Now they have real-time data that they can make better risk management decisions on. And because they're also encouraging their customers to be healthier, then the risk goes down for those portfolios as well. And I think what's really neat, you're talking about one piece of data. And this is where you're thinking about the big data. I mean, what is it that would really need to make a change for engagement with customers? The other good example, of course, we have Menninga here in Iceland. And I think it's fantastic because Menninga is almost doing a bit what Vitality is doing, getting this data and helping clients to think about their financial health, about saving for the future, about rewarding them for that, right? And again, Menninga is not a bricks and mortar model. Menninga is working with the banks here and has exported this abroad. And this is now what we consider as a platform business. And I'll talk a little bit about a platform in the last part of the presentation. But it's a really neat model. And I've been working recently with FinTech Innovation in Norway, and they're working on this project Society. And the Society Bank would be a fully mobile bank. And they are going to be leveraging the PSD2 regulations to be able to get all the data. So they're going to actually open up a European-wide bank. And they're going to be able to consolidate so you can have an overview. And the target that they have, so it's a very niche target. It's going to be on internationally mobile clients. So for example, I'm sure here many of you have family who are actually studying abroad. So even just to open an account abroad is really difficult. So they're going to make that process very easy with biometrics and of course with existing information. Then you can get also data about, again, they're going to be using AI to know what is it that the person likes. So maybe there's 200 customers that have the same interest in golf. So they can negotiate with the golf retailer to get better rates on it. But they're going to be focusing again on financial health, to saying, okay, if you're saving, then why not do this? But if you're starting to go over your limit, hey, do you know you're going over your limit? So you're aware so you don't pay those expenses. And again, having better customer engagement. So this leads to me the question on valuation. So does digital strategy actually have an impact on a company's multiple? And share price is driven by three key things, right? Of course, you've got the revenues and the forecast, dividend yield, and for banks, dividend yield is very important. I think actually the banks here in Iceland have done very well to be paying out dividends and having good dividend policies, and this will help to attract long-term shareholders. But the question is, in terms of the valuation multiple, right? Each bank is going to be looked at comparison here locally, but also against the regional peers, and not just the traditional banks. They'll be looked at the Monzos of the world. And I think this is a great slide. It really challenges the way we think about valuation, right? And this is comparing your traditional bricks and mortar business, manufacturing businesses compared to the platform businesses. So if you look at Uber, right? Uber was only recently created, 7,000 employees, and yet today, even today's market cap, I was just looking up, it was $68 billion. They consider themselves a car company, but they don't own one car. It's a platform, and why? Their valuation is more than BMW. But BMW, to be able to get any type of incremental return, they'd have to actually sell more cars. They'd have to invest into more manufacturing, right? Whereas for them, it's a platform. With the future, could potentially have auto drive. If you have auto drive, then you can avoid, especially here like in Reykjavik, you have to pay now. All P1 is everywhere for parking, right? You can't go anywhere without paying parking. So you could actually say, okay, I need to have a drop-off, just book it, bring me over, and the auto drive just continues on to the next destination. And this is where they're looking at these platforms because there's much more potential for exponential growth rather than just being stuck on the traditional, again, bricks and mortar or manufacturing basis. So you can look at all of these. I would say PayPal, again, you can look at it, less than 16,000 people versus Deutsche Bank. I think it's a bit cheeky, though, this table on Deutsche Bank, because they've gone through difficulties. Banks usually have much higher market caps. But this is the reality. This is what they're looking at. So it's to think, okay, well, when you think about is there something even here, like in Iceland, that we could do instead of, with all the knowledge we have, could we think about a way of developing a platform business where we have very good knowledge about it and exporting this globally? And I think we have the capability because Iceland is, very highly educated and highly digitized. It's one of the most digitized nations in the world. I think it's the highest number of users, Facebook users, for example. And leverage that to be able to go into these types of models and then not just depend on resource type management such as the fisheries, aluminium sector, or travel. So this is an interesting thing to think about. And then coming back to this original question about, does it really impact valuation? Looking at what are the revenue drivers versus the costs. And there are 3 examples, where I think back. I ran a capital markets day at HSBC in October 2008. So you think September 2008, Lehman Brothers went down. We had the emergency crisis here in Iceland with the banks. So HSBC, we had scheduled all these IR events, so we had to have one. So we'll talk about IT, right? So that way we don't have to talk about the liquidity crisis. And the only way, to be honest, that we got the analysts to come in that day is because we had a group event with the CEO afterwards. We had a reception. And nobody wrote about the event afterwards. And none of our shareholders had any interest in this. Why? Because it's just a cost-saving exercise, right? Then, fast forward. So last Friday I was talking to a friend of mine who is, he's the portfolio manager for a major global services financial fund at a major institutional investor, global investor. So we talked about it on Friday, and he was saying, today he does not add any value regarding digital strategy in terms of valuations for the banks. But, thinking about it, of course, there's the cost drivers. You're damned if you do, you're damned if you don't. And then, of course, the revenue. So if you're going to be investing in digital strategy to change, is this something that you're going to be opening up a new market, or is it just a defense mechanism to be able to retain your customer base? So at the moment, he's still kind of figuring it out, but he said there are 2 people that have just been recently taken in to actually look at, what's the impact from digital strategy, not just on banks, but on companies in general. And then the last point I thought was interesting. Of course, I've been in Landsbanki and the brokers coming around doing their roadshows and talking about listing the companies. And what would make Iceland attractive, right? So of course, there's really good GDP growth here. And it's probably some of the best GDP growth in Europe. And seeing, how the banks could grow there. The banks have been well restructured, strong in terms of balance sheets. Also, the regulatory, so the FME, the Financial Services Authority, has really stepped up in its role. Good dividend policies, because that's really important to attract. But the last point that I thought was really interesting was they were talking about digital and how digital is important. So for them to be bringing it up, this is something that is being discussed and needs to be thought about. So on that note, I'd just like to end the presentation back on how digital strategy can lead to a competitive advantage. And I want to thank you all for having me here today. Tack för det.